Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, February 24th, 2009. Well folks, as we get into today's intraday video, I want to talk about all the key levels. I want to talk a little bit about what's going on Wall Street today. We do see the market up across the board. The S&P up about 11, the Dow up about 86, and the NASDAQ is up about 17 on the day. And the result here is this, guys. You had a very oversold market, absolutely oversold. Just got hammered down. We broke key November lows. Usually when you break those lows, you do happen to get a little bit of a bounce. Although the market is not up that much. I mean, let's be honest here. 87 plus points on the Dow is not exactly a big update considering the down 250 yesterday, or 3%. So keep that in mind. A relative small bounce today. That's what we're seeing. We're seeing some news leaking out from the government, a little here, a little there, nothing in the major course of action. Bernanke's testifying on Capitol Hill currently as I do this video, and you are seeing the markets hovering here. I mean, we're hovering above the key levels on this chart here, and you can see the 50 and the 20 moving average right here. The markets did recapture that level here, look for consolidation, and then a possible move up to the highs of the day. Now, what I want to do first is draw in our key lines, and I'm going to do this live with you guys, so we're going to do the best we can, and just draw these lines in as we go. Now, these lines, again, are lines we cover in the nightly video for our premium subscribers. We do them at the end of the day, so our premium subscribers can extend them to the next day on their own charts and have them in. You'll see how these key levels over the course of multiple days play an absolute key role in everything. And again, that's part of our Research Center, our nightly video. Now we expanded the time from about 15 minutes in length in video to as high as 20, 30 minutes. We actually have unlimited time now in the videos on the Research Center, so I can really go into a lot of detail in regards to oil, gold, the dollar, the markets, the NASDAQ, you name it, even specific stocks. We can really go into more detail on the technical side. Now, let's first start with our key level, guys. And a lot of these levels are going to be from previous days, and that's the point here. Okay? So number one, let's first take our key level here, and you want to draw in our trend lines. So we're going to draw them in relatively well here. And you can see here how this level is very, very important from this high. And this was a very key one yesterday because every time we hit this, we got a bounce. And I want to even extend this line a little further here. And you can see how that played a key role. We closed literally right on top of it. What happened here? Got a bounce. What happened here? Got a green candle bounce yesterday. What happened? We closed right on it. What does that indicate? A possible bounce. Sure enough, we got the bounce of the gap up. Now, how do you know necessarily this gap up was going to go to this level? Well, a key trend line will tell you. You know, this is a trend line we had in yesterday too, guys. I mean, it's almost that simple where you just want to have these in. And just draw it from the low going back a couple days. Notice how it capitulates or kind of sideways and kind of trades in that range right here as that resistance. Remember, we broke through resistance to this level. You bounced, and what happens? Broken resistance becomes support, and this level continues to trade here. We break above it, we break below it, we come down again. What happens? We gap up and test that same line. Now, what's that line at? Approximately around 75.80. So 75.80, a key level in this market. And just one note here, let's extend that even further. What are we seeing, guys? The market's beginning to break above that. That's a bullish sign in my book in this market. Again, this market is very oversold and must be continued to be understood to be that way. Now, the other things you want to look in this video, first of all, let's talk about our lower trend lines. How are we getting this line, okay? Well, first of all, you can see this bounce happen right off of this line. Every time you get a bounce in the market, you want to take that approximate low and drag it across, because that's telling you there's a pivot point there. There's probably a prior support line right there, and you want to have a straight line. So let's take the low right here and drag it right across. Boom. All of a sudden, we have our opening candle range. Our gap up happened to be right at this level. And before we pushed up into this resistance, then we came down, broke it. We came down, broke it to the upside. We went right into the 50 moving average there, at which point we broke down, and then we consolidated on that line again. And that's why it's so important to have these lines in. I mean, you have to have them. I did a little talking in the chat room today, and I talked about how the average trader out there is the normal trader, the trader that doesn't necessarily want to study that much, doesn't really want to educate themselves on the hardcore technical side. I'm not talking about stochastics, RSI, MACD. I'm talking about trend line analysis. I'm talking about price analysis. I'm talking about timing patterns. This is the stuff that we go into. It's imperative because in many of these situations, this is everything. Knowing that these trend lines are here is everything. I mean, how do you know to wait possibly for a break of this 20 and then go in long? because you're going to have a consolidation candle. And sure enough, a lot of people would be buying on the 20, and they're waiting. Instead, all the traders that know about pricing and pattern and support lines and trend line analysis wait for that to be hit, even punctured right there, and then pick up that play. They're the ones getting the better entry point than you are, or the amateur trader, or the novice trader, or the average trader out there. Now, again, what we're seeing here, folks, is I like this from one standpoint. You had a nice move back right to the 75.80 level, and that's currently where we're trading, right on this trend line. Also, you have the 20 and the 50 right below it. That's going to give me a little bit of positive bias in this afternoon session. If we were to break higher, where are we going? Right to the highs of the day. How do I know where that high of the day is? Take the line right there. Boom. Another important trend line analysis tool, because, again, look at this, guys. See this 50 moving average? A lot of people would short at that 50. So right away it hits the 50 right here at 76.03, and the average trader goes short, not knowing trend line analysis. What does the trend line analysis trader do? Or, investor or swing trader? They wait. Patience pays off. Their shorting happens at 76.23, over about 25 cents higher than the other trader. Who do you think is going to make more money when you get this red candle pullback? Obviously, the one with the better entry on the short position is going to get that. That's what is done. I mean, that's what it comes down to, guys. So again, keep that in mind. On the downside, support lines, you obviously know right here, right around gap fill, you're going to have support. You can just draw your trend line in anywhere right along here will be decent support in this range, and that's right where you're coming into, right around where this candle closed of the day. You can see you're going to have support there in that range on the downside. So that's another trend line analysis tool. Understand all your levels on your intraday charts, and you're going to be a 10 million time better trader, more profitable. You compound that profitability over the course of a life of trading, and it's probably millions of dollars. No doubt about it. Just in better entry points, understanding the charts. And this is why you have to learn it. This is why we have a webinar on March 14th, Saturday, 1 p.m. to 6 p.m. 5 hours of intensive training on this stuff, guys. You got to be aware of it. You got to be into it. It doesn't matter if you're a swing trader, day trader, or you're watching this at night after working a hard day. If you're going to become one of those elite traders, or at least elite investors, where you know where to enter the market, you got to be on top of that, folks. So I do encourage you to join the chat room. Notice a little bit of consolidation going on currently right here off of this move up, and every level key is level. You can extend these lines. I mean, I haven't extended them, but if we were to break this low, this would be the line that would be tested. The lows of the day would be the next support. I mean, it's just a matter of understanding your support resistances. And here's, let's go to the daily chart of, I don't know, Goldman Sachs. Sure. Here's the daily chart of Goldman Sachs. Same trend line analysis can be done. Look at this level. This is a level you're going to have going all the way back here. All right? Understand your levels. Understand when you're coming down to supports. Here's your gap fill right here. Look at how that market comes right back in. Here's a gap, and you gap up. You fill that gap. You rally back above it. When you come back down, that's still support, and you need that on your chart. This is all technical stuff you got to know, guys, on Goldman Sachs, Apple, daily charts, weekly charts. I don't care if you're a buy and hold for a year. If you don't use this, it's insane. All right, long story short is this, guys. Going back to the intraday SPY, let's type that back in. And, again, consolidation continuing here. As of now, this is bullish. Should we break below this 50 and 20, I would get bearish for a pullback to this line here at 75.30, thereabouts, 75.30 if we break the 50 and 20. If we break that 75.30, then you're looking at a low of the day test very possibly on this market, okay? Keep that in mind, guys. This is your trend line. Now let's go to the 60-minute. 60-minute chart of the SPY, very, very interesting chart. We continue in the lower trend line area, and I want to just draw this in. All right, there's your trend line. All right, and you can have a parallel line very clearly drawn in here, relatively parallel lines right through here, from the low to the low to the low and so forth all the way down. Now, this is the channel you're in right now, absolutely. If we come up and test the 20 moving average here on the 60-minute chart, that's going to be resistance, clear enough. 60-minute chart coming up, it's the upper trend line of this channel we're in. It'll be extra resistance. One thing I will say about this market, it's consolidating here. The question is, which way does it break? You don't have a big enough up candle necessarily to signify a positive move on a consolidation pattern here. So as of now, I still would favor slightly a test of this upper trend line. If we break that, then gung-ho, to the upside, obviously. But, there are levels here. That'll be, I'll go into those levels in the Research Center video tonight for the premium subscribers. But long story short, right now you're just trying to watch to see, is this a bearish chart pattern? Is it a bullish chart pattern? Right now it's a neutral chart pattern with a slight bit of bullishness only because of the intraday 10-minute. So you go back to the 10-minute, we talked about consolidation. Now look, the market's beginning to uptick. Where's the next resistance if you break that up? right there, folks. Alrighty, have a wonderful day. Join the chat room. Join the research center. You'll love it. Take care.